Here is a summary of the Apple Q3 Fiscal Year 2025 earnings call transcript, designed for clear, spoken delivery. Apple Q3 Fiscal Year 2025 earnings call summary. Good afternoon, everyone. Today, we'll review Apple's financial results for the third quarter of fiscal year 2025. Key financial highlights and performance. Apple achieved a new June quarter revenue record of $94 billion, marking a significant 10% increase year-over-year, exceeding expectations. Earnings per share also set a June quarter record at $1.57, up 12% year-over-year. This growth was broad-based, with an acceleration seen in the vast majority of global markets, including Greater China and many emerging markets. Notably, Apple set June quarter revenue records in over 24 countries and regions. Revenue breakdown. iPhone revenue reached $44.6 billion, an impressive 13% increase year-over-year, driven by the strong performance of the iPhone 16 family. Apple also celebrated shipping its 3 billionth iPhone. Mac revenue was $8 billion, up 15% year-over-year, largely fueled by the M4 MacBook Air and strong performance across the Mac lineup. Services revenue set an all-time record of $27.4 billion, growing 13% year-over-year with double-digit growth across developed and emerging markets. Wearables, home, and accessories generated $7.4 billion in revenue. iPad revenue was $6.6 billion. Gross margin and expenses. The company's overall gross margin was 46.5%, at the high end of guidance. However, this was down 60 basis points sequentially, primarily due to approximately $800 million in tariff-related costs. Products gross margin was 34.5%, impacted by mix and tariff costs. Services gross margin remained strong at 75.6%. Operating expenses were $15.5 billion, up 8% year-over-year. Management's outlook for Q4 fiscal year 2025. Looking ahead to the September quarter, Apple forecasts total company revenue to grow mid to high single digits year-over-year. Services revenue to grow at a year-over-year rate similar to the June quarter. Gross margin is expected to be between 46% and 47%. This estimate includes approximately $1.1 billion in estimated tariff-related costs. Operating expenses are projected to be between $15.6 billion and $15.8 billion. Significant risk factors, macroeconomic conditions, tariffs, and legal/regulatory proceedings are identified as potential risks that could cause actual results to differ materially from forecasts. The outlook specifically assumes that global tariff rates, policies, and application remain in effect, the global macroeconomic outlook does not worsen, and the current revenue share agreement with Google continues. Key takeaways and highlights. Strong product momentum. Double-digit growth was seen across iPhone, Mac, and services, highlighting the appeal of the latest product families and the ongoing strength of the services ecosystem. AI integration and investment. Apple is deeply embedding AI across its devices and platforms, with Apple Intelligence being a central theme. Significant investments are being made in this area, powering features that are personal, private, and seamless. Record installed base. The installed base of active devices reached another all-time high across all product categories and geographic segments, indicating strong customer loyalty and future potential. Emerging market growth. Significant growth was observed in emerging markets, including India, the Middle East, South Asia, and Brazil, showcasing Apple's expanding global reach. Commitment to the U.S. Apple reiterated its commitment to investing $500 billion in the U.S. over the next 4 years, focusing on innovation, job creation, and domestic manufacturing. Vision Pro development. Updates to Vision OS 26 were highlighted, focusing on enhanced user customization, more lifelike personas, and new enterprise APIs. Lowlights: iPad and wearables revenue decline. iPad revenue saw an 8% year-over-year decline, and wearables, home, and accessories revenue was down 9%. These were attributed to difficult comparisons against strong product launches in the prior year. Impact of tariffs: tariff-related costs significantly impacted gross margin, with an estimated $800 million incurred in Q3 and $1.1 billion projected for Q4. CEO statements: Tim Cook expressed pride in the June quarter results, highlighting the June quarter revenue record of $94 billion and the record EPS of $1.57. He emphasized double-digit growth across iPhone, Mac, and services, with particular strength in Greater China and emerging markets. Cook underscored Apple's commitment to AI as a profound technology, with Apple Intelligence being central to their strategy of making advanced technology personal, private, and seamless. He mentioned exciting updates from WWDC, including a new design aesthetic and new AI features like live translation and Workout Buddy. Cook also touched on the record performance of the iPhone 16 family, the strength of Mac with Apple Silicon, and the record revenue in services. He noted the company's ongoing investments in the U.S. and the evolving tariff situation. CFO statements: Kevin Parekh provided detailed financial insights, confirming the $94 billion revenue record and the 10% year-over-year growth. He detailed the product's revenue of $66.6 billion, up 8%, and services revenue of $27.4 billion, up 13%. Parekh confirmed the overall gross margin of 46.5% and detailed the sequential decline due to tariffs. He highlighted the strong operating cash flow of $27.9 billion and the return of over $27 billion to shareholders through dividends and repurchases. Parekh provided the outlook for the September quarter, emphasizing mid to high single-digit revenue growth and a gross margin range of 46 to 47%, including the significant tariff impact. He also addressed the revenue deceleration projection by noting the pull-ahead effect from tariffs and a difficult compare from last year's iPad launches. In summary, Apple delivered a strong June quarter, exceeding revenue and EPS expectations, driven by robust performance across its key product and service categories. The company is making significant strategic investments in AI, while navigating macroeconomic challenges and the ongoing impact of tariffs.